Hey guys, previously living on this channel is for educational purposes only, is not intended as financial advice. So just a quick follow-up to last video. We indeed did have the falling wedge. I'm not a back patter, but it worked out. All that matters is the P&L. If you saw it, great. If you didn't, now you learned how to trade this. Stops at the low, just let it go. Ideally, all wedges hit the maximum of the beginning of the wedge. Not always the case. That's why you got to pay attention. And you can see we had a massive div here. Obviously this is hindsight, but hopefully you saw this as it's happening. I mean, I got out way too early. I got out somewhere in here anyway, so it didn't even matter. But point being, use divs to allow you to close your trades accordingly, even though they don't reach the expected target. Another thing you could have used was the Williams fractals. I have a video on that on the channel. Check that out. So where are we now? Much like Tony Hawk's Pro Skater 2, which was a phenomenal game, we're just going to combo off into these reversal patterns. So we had the falling wedge. Now we're working on an inverted head and shoulders-ish. I'll talk about that in a second. Now let's just talk about some things that are permanently on my radar. I've been following the Bitcoin difficulty much as many people have been. Generally, I've thought that decreases in difficulty were actually bullish because it decreased issuance, decreased inflation. I'll talk about that again later. But it certainly wasn't the case here because price obviously fell hard and miners got squeezed. Maybe the hardest they've ever been squeezed. Certainly the miners in 2017 above 3K who had expensive electricity, had not ideal ASICs, they're gone. They're just flat out gone. They can't afford electricity. It's not profitable. And that's a lot of what we saw in these adjustments here. But now we're seeing like a return to mean-ish in that regard, and we got a +8 coming up in less than a day. So that'll be the first plus difficulty that's substantial since October. So 2 months. That's something. 3 months, whatever. I don't know how to read that exactly, but it's certainly not as dire as it was in these couple weeks. You know, we were hitting potentially up to 25%, which is the maximum adjustment per difficulty adjustment. So that's difficulty. Neither bullish nor bearish. It is what it is. It's probably more bullish than bearish because less miners. The other thing is, you know, when miners are in dire straits, what are they going to do? They're just going to dump everything immediately because they have to. They have to pay for electricity. Those are the people that, you know, got in late, like I said. Ideally, these people coming online now just don't need to dump everything because their electricity is like 2 cents per kilowatt or whatever, kilowatt hour, or less in some cases. So hopefully that's more bullish than bearish. I don't know, something to think about. Let me know in the comments what you think. Here's my market cap chart. I like to just follow this lately just to see who's sort of outperforming who and when and where and who's in the shuffle. You can see Bitcoin Cash obviously outperformed everybody. Even Ethereum actually outperformed everything else except Bitcoin Cash, which was a little odd. You know, at 2x in less than a week. You're not going to see that often on anything. I don't know what this Bitcoin Cash was. Probably a 2x, but you can see everything else certainly bounced, but not as much as Bcash and ETH. And there's no really like actionable things to glean from this. I just like to look at it, see what's going on. All this other crap is just sort of shuffling back and forth. The CME futures contracts, sort of actionable, sort of not actionable. Mainly any contract open has been sold off within the week, almost guaranteed, barring this one here. So, and this one here. Okay, so maybe not every time, but for the most part, let's say 80%. You know, sell off, sell off, sell off, sell off, sell off, eventually selling off, selling off, selling off. So we have another open coming up, which may or may not disrupt the inverted head and shoulders, which I'll talk about in a second, on December 31st, which is tomorrow, EST, so 9 a.m. EST, I think it is, whatever it is. It might not be immediate. It might be within the week into the new year. We'll see what happens. It may follow legacy, which is what this chart is showing. So this is Bitcoin. You can see the inverted head and shoulders pretty well on the line graph. So shoulder, head, shoulder. The shoulders are messy, whatever. I don't care. It's not horizontal. I don't care. You don't have to believe it. I'll show you another way you can think of this as inverted head and shoulders, but down here are indices in oil. Everything sort of bounced, hasn't really done well. You know, if you've been paying attention to any of the headlines, things aren't really looking good for Legacy, even into the new year. We'll see how that affects crypto in general. If it's a risk-off environment, crypto doesn't do too well based on the past few months that we've noticed. This is gold, so gold is certainly outperforming everything in the past month or so. You know, you can even since beginning of Q4 sort of just started to creep up. Certainly outperforming Bitcoin, so there's no strong correlation there. If anything, there's an inverse correlation between risk on, risk off, sort of safe haven stuff like gold versus crypto. Something to keep in the back of your mind, maybe on a back burner. Much like the tether pricing. You know, imagine being the guy who sold your tether at 85 cents on the dollar and now you see it at $1.02. Okay, so this is why when people who've been here for a little while are saying this tether crap is nonsense and it's going to work itself out, despite the headlines, despite the news, yes, it's always a risk to carry tether, hold on to it, to trust that it's going to be there tomorrow. But on balance, if it's never not worked out. There'll be a day, maybe eventually, where it won't. But for the most part, you know, people who are buying the plunge protection team, no doubt, buying below 90 cents. I mean, Jesus, they're making out like a bandit right now. Why it's at $1.02, wicking to $1.02, I don't know. That's a little mysterious. There's also been very few movements out of the wallet, so I don't know what's going on with Tether in general, but maybe it'll die into the new year. We'll see. That'll be an exciting revelation. Something else I like to watch, long short, not super correlative, if that's a word, between pricing, but if we're about to go up, which I think we are, and we are net short, that says there's more fuel in the rocket to push us there. As short stops get hit, as shorts come off, you get a bigger move because they have to cover or close their short. So that's looks fine to me. You know, if longs were at an all-time high and I'm expecting it to go up based on the chart pattern, I'd be a little less certain than I am now. Much like the falling wedge situation. You know, we were net short going into that. So that's bullish to me based on the pattern. And this is just a small subset of overall crypto system. It's a sliver, but it's something to look at. You know, you can look at BitMax, Deribit, whatever, CME even, and see are people net short, net long, etc., and use that accordingly. Okay, so let's get to the chart for Bitcoin. We're below the cloud, sure, everything's bearish, yeah. But again, C-clamp still there, C-clamp, okay. So that tells me we're likely to go up and down here, especially if we stay sideways, just irrespective of the chart pattern. If I turned off the price, the candlesticks, and I just looked at what the cloud is telling me, the cloud is telling me we're going to mean revert back to the Kijun 485 on index, okay. If we stay sideways from there, 5.2, 5.3 would be a target. 6.2 is likely 6 months to a year away. It's going to have to consolidate. I doubt it's going to just burst through there. It's going to take a fundamental event, which we may see. I don't know. It's unlikely. You know, we basically consolidated at that level for 8 months-ish. We're not going to just bust through that going on the way up. It's just not going to happen. It's going to take some time. It's going to be obvious. It's going to be a pattern. It's going to be something. It's not going to skyrocket. If it does, there's some fundamental event going on. Now this is the 12-hour or singled cloud on the daily, depending on however you want to look at this. Again, inverted head and shoulders, declining volume profile. RSI is zeroing out at 50, which is what you want to see before a move. It says momentum is flat. Stoke is a little troublesome. It's crossed bearishly, but it's in neutral territory, let's say. I don't know. It's above 40. Stoke's not my favorite, but it is what it is. Again, you're seeing edge-to-edge potential, 4,900. I don't think it will just shoot above that level. This might take some time, might take 2 weeks, might take 5 days, whatever it is. That's the target with the cloud, irrespective of the messy inverted head and shoulders, which it's messy. It's definitely messy. But I don't think it's not there. So I'm going to trade it like it is there. I'm going to trade this like an edge-to-edge. And so as soon as it hits the inside of the cloud, that's your long entry signal. and your stop would be at the cloud level at the Kijun level, which is like 3,700, something like that, and even the right shoulder. So between 36 and 37 would be your stop loss level, and you just let it ride, baby. Go for that $1,000 gain ish, and it looks, based on VPVR, it looks pretty good. You know, the volume profile, there isn't a lot of stuff here. You can certainly just fill this gap pretty easily. I don't think it'll get to 5.5, but certainly to 4.9. It looks good as it is. I mean, there's the bullish TK cross, like, it looks good, right? There's nothing else to say here, well, other than this chart, really. Let's go to ETH real quick. So the Constantinople hard fork is set for 17 days, mid-January. That means that the ETH issuance, ETH inflation will go down by 75%, I think it is. Something like that. It's going to decrease rather than increase, which is good. So red is BTC, purple is ETH, and after the hard fork, it'll drop just like it did, you know, on the Bitcoin halving. It'll just drop as soon as it hits. You can see Bitcoin inflation, like I mentioned earlier, was at all-time lows basically because of the difficulty adjustment and the hash rate. So if hash rate's falling before difficulty can catch up, block times go way up, issuance goes way down, inflation goes way down, which is another reason to think of negative hash rate as a bullish situation on balance because of the decrease in issuance. Not always the case, obviously, but you can see it's the inflation bounced back basically to previous levels, the previous zone. As hash rate increases before difficulty can catch up, block times decrease, issuance goes up, inflation goes up. So that's just something to keep in the back of your mind, but something to watch after mid-January would be the ETH inflation percent. It'll definitely drop substantially. Whether or not that'll matter, whether or not that is priced in, whether or not it'll be low enough, I don't know. That remains to be seen. I think it's certainly more bullish than bearish on balance. Going forward, I don't necessarily think it'll have an immediate effect, but there'll certainly be interesting mining situations because miners are going to continually get squeezed, which likely will centralize the mining power even more than it already is for Ethereum. So the ETH chart is actually pretty simple. In my mind, there's not really much to say. Much like the Bitcoin edge-to-edge scenario, you're seeing that potentially play out here. This could be inverted head and shoulders. It's pretty messy. It's messier than the Bitcoin one, certainly. It's got a rising neckline, which I've probably never seen before. If this is the case, as far as inverted head and shoulders, I'm much more comfortable calling it like an edge-to-edge situation. So a trend reversal through the cloud. You can see it wasn't above the cloud or in the cloud for most of the year. Most of the year it was just down, down, down. Cloud is never wrong. It's just if you trade it right. I'll say that again. Cloud is never wrong. It's never wrong. It can't be wrong. It's just following the trend. There's certainly a case for a long entry up here, like there was down here, based on the edge-to-edge potential. It didn't make it. It printed an inverted or a bearish head and shoulders here, which you had to have seen as it's happening, much like the falling wedge situation, bear div, like you have to watch this stuff as it's happening. So anyway, yeah, edge to edge, certainly possible. Inverted head and shoulders, pretty messy. Volume profile is not really there. And the good thing about the ETH chart is it's really easy to see the levels because any cliff edge will be resistance. So any previous consolidation, I can think of this as an order block, as a VPVR, whatever. Like I don't need to see it on here. I just know that volume's here, volume's here, volume's here, right? There's a lot of volume in here, a lot of volume in here. It's unlikely to shoot above 350. That's going to take, it took 4, 5, 6 months the first time. It held the second time. It's not going to just shoot up. It's just not going to happen. So much like Bitcoin 6200 level, the 350 level, I just don't see it. It's super strong resistance. It's not going to just bust through. Doesn't mean you can't trade this stuff in here. 200, 210, I think, is a decent target, which is kind of insane based on the low of 75, 80, whatever it was. But it is what it is. You can see it had a nice Kijun bounce down here for the bear. And like I said earlier, edge-to-edge setup. Not much. not much else to say. If you go down to the 4-hour, you can see the RSI is above 50. That's where you want it to be. If you think it's going up, it's consolidating near 50. It's not particularly bullish, but it's more bullish than bearish. It's above the cloud. You're getting this TK snaking. A clean entry signal would be the TK cross bullish here. So you can set an alert for that on TradingView even and just wait for it. Yeah, not much else to say. Looks good for up. Doesn't look good for down. It's certainly leaning bullish and leaning trend reversally. Let me know what you think. Like, dislike, comment, share, subscribe, and hit me up on Twitter. Happy trading.